Welcome everybody. My name is Brent, and in this video tutorial, we are going to walk through exercise 16-6. Let's read the question together, and then we're going to have a little bit of background on exactly what we need to do here. So in this question, Kinross Gold Corporation paid $12 million to acquire a 40% investment in Minecraft Limited. Further, assume Minecraft Limited reported net income of $1,780,000 for the first year and declared and paid cash dividends of $650,000. Record the following entries in Kinross's general journal. And the three entries that you see listed there are related to the purchase of the investment, the proportion of Kinross's net income that they would be entitled to, and then the cash dividends that Kinross would also be entitled to. Now, I want to highlight something right off the bat when you see the percentage of the investment. I want you to highlight that because, as we talked about, that percentage of the company that's being invested is very, very important. Let me show you what I'm talking about. When we go back to the slides from chapter 16, you'll recall this handy flow chart. And we know that it's called significant influence when a company makes an investment of another company and it provides 20 to 50% of the vote. So when we have the situation of significant influence, we are going to use the equity method. Okay, and we talked about the equity method in class, and one of the very important accounts that we use in the equity method is this account called investment in blank common shares. Okay, and it's the company's common shares that is being invested in. And so in this case, it would be Minecraft Limited, but investment in Minecraft Limited common shares. Okay, that would be the journal entry for the purchase, the journal entry for the net income that Kinross is entitled to, and the journal entry for the dividends that Kinross is entitled to. Those are the structures of the journal entries that we are going to use for the equity method. Now, very important to keep in mind that net income will increase that investment account and dividends will decrease that investment account. And this will look very familiar if you think back to our conversation about retained earnings and net income in dividends. And if you think back to that, we talked about how net income will increase retained earnings and dividends will decrease retained earnings. Well, very similar relationship in this investment account. So if we go back to the journal entry for the purchase, investment in Minecraft Limited common shares, we're debiting the account on the date of the purchase. Okay, and then we're also going to debit that account, investment in Minecraft Limited common shares, when we record the net income that Kinross is entitled to, because that will increase that investment account. And then when we record the dividends that Kinross is entitled to, we are going to credit that account because it will decrease the balance in that account. So I want you to keep in mind what we just reviewed on those slides as we work through these journal entries. When we debit that account and when we credit that account is a result of whether that account is increasing or decreasing based on this table that we see here. So let's go back to the problem in the workbook. And I'm just going to enter the journal entries directly into the workbook. And we'll take a closer look at a few of the other important figures in this question. Kinross paid $12 million to acquire a 40% investment in Minecraft. Okay, Minecraft reported a net income of $1,780,000 and declared and paid dividends of $650,000. Those are going to be very important figures as we work through these three journal entries. So let's work through the first one, January the 2nd. Okay, we talked about how when the investment is purchased, okay, when the investment is made, we are going to debit our favorite account, investment in Minecraft Limited common shares. Okay, and we're going to credit cash. Okay, we're paying $12 million for this investment. Okay, so debit, sorry about that, debit investment in Minecraft Limited common shares by 12 million, and we're going to credit cash by 12 million. And that 12 million is given to us right in the question. That's the amount that Kinross paid to acquire the 40% investment in Minecraft. Okay, the next journal entry on December the 31st, this is the journal entry to record Kinross's proportion of Minecraft's net income. Well, the total net income, it says, is $1,780,000. Now, keep in mind that Kinross purchased a 40% investment. So a 40% investment in Minecraft will entitle Kinross to 40% of the net income. And like we said, recording the net income will also increase this account, Minecraft, investment in Minecraft Limited common shares. Okay, and the account that we're going to credit, like we saw in the slides, is your equity investment, equity method investment. That's straight equity method investment revenue. Okay, it's a revenue account, so we're going to credit that account. And what amount are we going to use? Well, we talked about how the total net income is $1,780,000. We're entitled to 40% of that. So I'm just going to make a quick note down here of how we calculate that, so you can go back and see where that number came from. 40% of the net income, the total net income is $1,780,000. You pull out your calculator, do that quick calculation, 0.4 multiplied by 1,780,000. I get $712,000. Okay, so that's the journal entry to record the net income that Kinross is entitled to, 40% of the total net income, because they have a 40% investment in the company, in Minecraft. The last journal entry is the journal entry to record the receipt of the cash dividends. Okay, so just like when we receive cash dividends, nothing new, we'll debit cash, we're receiving cash. Now, the tricky part to this journal entry is just what we talked about. We know that dividends are going to decrease this account, investment in Minecraft. I know what you're thinking, Brent, why didn't you just copy and paste from the other journal entries? I could definitely do that. Probably should have done that to save time, but you get the idea. We're using that same account, investment in Minecraft Limited common shares. Okay, and how are we going to calculate that? Well, the total dividends that are declared and paid are $650,000. Okay, so if we have a 40% investment in the company, that means that we're entitled to 40% of those cash dividends, 40% of 650,000. Grab your calculator again, have that handy. 40%, 0.4 multiplied by 650,000 gives me 260,000. We can enter that as a debit to cash and a credit to investment in Minecraft Limited common shares. So the takeaway from this question is that this account will be used quite often. Okay, you can see in each of these journal entries, we use that account, investment in Minecraft Limited common shares. We debit that on the purchase. We debit that when we record the net income because it's increasing that total, and we credit that account on the record of our dividends because it's decreasing that account. That's it from me, everybody. Take care.